Company A asserts that the net value of their accounts receivable at 12/31/2008, based on an aging of receivables, is to be $225,000. So some of the additional information is as follows. Their allowance balance, so their allowance for uncollectibles, has a beginning balance of $20,000. They wrote off $10,000 of the allowance that they have, and they subsequently recovered $5,000. So basically that's just saying they gave up on $10,000 worth of the amount that was owed. They came back and they're saying that they got paid from the amounts that they wrote off. So $5,000 was recovered. At the end of the year, they had an accounts receivable of $270,000. I could see why you guys would be confused with the $225 and the $270. So let's get into this because we're going to be accounting for the uncollectible accounts expense. So that means the bad debt expense. So when we are accounting for this contra asset, the types of questions that you're either going to see are going to be requiring you to determine the bad debt expense or the ending balance of the allowance. So the beginning balance we know is what? We know it's $20,000. And what is the ending balance? So this is where things are a little bit tricky, but it's pretty simple once we know the differences between the net and the gross accounts receivable. So basically what we're saying here is that $270,000 is our gross account receivable. So what we're saying here is our gross accounts receivables before considering our allowance, or the amounts that we are estimating to be uncollectible, is going to be $270,000. Our net amount after we have determined our allowance is going to be the $225,000. So net is $225,000, gross is $270,000. I think this is going to be the best way for you guys to think about this in case you see a question like this. $270,000 less our allowance is going to be our $225,000. So now we can determine our ending balance because we know that this is 12/31/2008. So our ending balance for our allowance is going to be the difference between $270,000 and $225,000. That's going to simply be $45,000. That is our new ending balance. So now we can determine our bad debt expense. We know that what we wrote off during the year was $10,000. And we know we subsequently collected $5,000. Right? We now know our bad debt expense is our plug and our income statement item. 20 less 10 is 10, plus 5 is 15. 15 plus what equals 45,000. Our plug is 30,000. That is going to be our bad debt expense. That is going to be our answer.